So good afternoon from Singapore and around the world. Welcome once again to DealStreetAsia's PEVC Summit 2021. Today, I am very pleased to welcome Hari Krishnan, Group CEO of PropertyGuru, an online property marketplace in Southeast Asia. Many of you will remember a major transaction PropertyGuru did recently in July, an announced SPAC merger with Bridgetown 2 Holdings. This merger will see PropertyGuru publicly list on a New York Stock Exchange by early next year at a valuation of $1.78 billion. PropertyGuru is present in 5 Southeast Asian markets and continues to grow from strength to strength as one of the region's top unicorns to watch. Thank you for joining us today, Hari.
Thanks, Kristie.
So before we get into this whole exciting bit and newsy bit about your SPAC exit, I want to kind of just take us all a step back and start from the very beginning. The title of today's Fireside Chat is called PropertyGuru: The Road to Building a Regional Property Marketplace Leader. And when you first joined PropertyGuru, the company you guys were in property, you were somewhat regional, maybe a leader, but most definitely not a marketplace. In fact, you guys started out as a classifieds company. I was wondering if you could kind of take us through some of the biggest milestones and hurdles you had to cross to get PropertyGuru to where you are today.
Sure. And I think it's a great discussion because we're actually going through another transition point, which we'll talk about later. But essentially, if you think about a company, a fundamental belief that I have is there's no single founding moment. Any successful company over a significant period of time has multiple founding moments. There's obviously the moment where the entrepreneurs actually set up shop and start building. But I think if you're going to be successful, you're going to transform yourself a couple of times. And I think the companies I've seen who have done the best job at this have actually created inflection points, big moments to not just rally their troops and such, but also have clear articulation of vision, clear articulation of what is the change in strategy and such. So when I joined the business, PropertyGuru was founded in 2007 in Singapore as a classified site. It was among the very first classified sites in Southeast Asia, the very first property classified site in Singapore. And it definitely, the founders, when they started out, they had a vision of more transparency in home discovery for home seekers in the residential property market in Singapore. At the time, the only option was a few lines of text in the newspaper, and it was pretty hard and inefficient. And they felt, for a developed country, we needed better solutions. We evolved, and I came on in the journey. We're about 7-8 years old at the point. I joined in late 2015, about 6 years ago. And at that point, that first phase of growth had resulted in us using good entrepreneurial energy, actually had expanded into 4 markets by that point. And it was really very much about establishing our presence and growing a little bit regionally. But then we entered what we called PG2, our second phase of growth. And that was from early 2016 till about late last year. And that was about investing in team and technology, establishing clear market leadership, increasing profitability, and truly becoming a technology business. And when we think about ourselves today, we consider ourselves a product diversified property technology business. Now, most people are familiar with our consumer marketplaces, which are there in Singapore, Vietnam, Malaysia, Thailand, and Indonesia. Just so you have a sense of scale, today now we serve over 50 million visitors every month. We have over 50,000 paying property agents across the region, over 2.8 million paid listings. All of these are industry-leading numbers for Southeast Asia. But when we sort of reached this inflection point again at the end of 2020, we said, how do we think about this next phase of growth? And actually, we're in the process of entering what we call PG3, a third phase of growth, another founding moment. And essentially, we said, okay, now we're a market leader. We've understood how to be operationally profitable. But now that we have this leadership position, we both have a responsibility and the opportunity to lead this industry forward even further. And that's really in the pursuit of building what we're calling a property trust platform. And we can talk more about that. But essentially, it's about being articulate to your staff, to your customers, to your investors, being really clear about what's the business you're building and how will success be measured in this phase of growth that goes ahead. And for some people, that's exciting and inspiring. But also, frankly, and this is important for all the entrepreneurs, for some of your staff, that might be the exit jump-off point. And when we move from PG1 to PG2, absolutely, we had some excellent gurus who decided this was not the company for them. They wanted to be in a smaller company, and they went for that. But I think you need to be clear and transparent, and then you have all the right people on board for the next 3 to 5 years of your growth.
Maybe take a step back again. Like, could you kind of break us down, like, exactly what was PG like in terms of the size of the company, the structure of the organization, the culture, all of that, and then what is it like in PG2, and then what is it like in PG3?
So I think in PG1, it was very much about entrepreneurship, right? I think the entrepreneurs were experimenting. They were trying a number of things. By the time I came on board, they were already the market leader in Singapore. A lot of people, I mean, the house I'm talking to you right now, I founded on PropertyGuru. I wasn't working for PropertyGuru at the time, but I found it. And so for a number of people, I would say millions of people by then already had found homes on PropertyGuru and our other platforms across the region. We already were in Malaysia and Thailand and Indonesia by that point. I think what we had at the time was great entrepreneurial energy, a good culture of people who work really hard. And in an entrepreneurial phase, you have a lot of really good generalists. I think you can't have this attitude of it's not my job when you're an entrepreneurial company. Everyone has to do whatever it takes to build. And I thought that was fantastic. But for the next phase, we needed to bring in some specialists. We needed to bring in some specialist functions. We needed to professionalize the executive team, and we needed to significantly improve our technology capabilities. And so PG2 was very much about first and foremost, the starting point for all of this was articulating our vision, our values. We have a document that we call Vision to Values. It has our vision, our mission, our strategy, our culture, and our values. At every town hall, and we have a town hall every quarter, at every town hall, I personally actually talk about vision to values. I talk about ways in which we're already working well against this. Periodically, we look at areas where we're falling short of our own ambitions. But PG2 was about articulating this, then hiring the right team to actually pursue this, and then measuring the things that mattered. And so we started talking about unit economics. We started talking about the technology and what were we shipping. We shipped our first augmented reality products. We entered into enterprise software in PG2. We started selling software to developers and banks, etc. So I think all of this was part of saying that to deliver this greater transparency, and over time we said we wanted more transparency and efficiency. There's a lot of inefficiency in the real estate sector as well. So we said transparency will come from our marketplaces, and efficiency will come from software, from data, from property financing. If we can do both of these well, over time, we will create trust between the stakeholders in the property ecosystem. And for that, we needed to articulate the vision, change the culture and the mindset. And that resulted in superior technology and finally in superior financial performance for the business itself.
Yeah, I mean, the reason why I wanted to touch on this point as well is because, we do have, and we do see many startups in the ecosystem now that are, growing super quickly, super fast, raising a lot of money super quickly, and approaching these thresholds at a super rapid pace, right? I mean, I don't know from your experience, like, were there specific things that you had to add or take away from when you first joined PropertyGuru as CEO in order to kind of incite those particular changes that you were trying to make for PropertyGuru?
Yeah, I think I talk about this a lot inside the company, but in 2016 in particular, my primary objective was focus. And so the number one thing I did was actually shutting down projects. I shut down a number of projects inside the business and repurposed the same people to focus on the remaining projects. And essentially the goal was twofold. First and foremost was making sure we got better at the speed of completion, not the speed of incepting new ideas. Entrepreneurial companies are very good at saying, that's a problem, let's go solve it. But the truly successful businesses that scale up well, that get from startup to scale up, and PG2 was very much about that scale up phase. The ones that do that well understand that not all of your experiments are successful. You need to actually shut them down. And I think that discipline, having it versus not, separates the winners from the others. And I think what PropertyGuru did well in PG2, and what I tried to bring in was this element of focus. We'll do a few things and we'll do them well. And I think the second thing which I wanted to achieve from this was, how do you actually do that prioritization? And this is an interesting thing. When you're a startup, you can't invest in everything. If there are things you have to give up in pursuit of speed and pursuit of just achieving certain objectives. We didn't necessarily have the best data. We didn't have a full data-driven culture. So not all our decisions were based on data. It was based on entrepreneurial gut instinct, and that's great when you're young. But when you're trying to get scale up, the gut will always have a place, but you need to start with data. And I think the point I made early on was either you build a data-driven argument as to why your project needs to get the investment and the focus, or I will shut you down. And if in the absence of data, the CEO and the executive team are going to make some subjective decisions because we have no objective data. We're going to make a subjective decision to choose between an apple and an orange because our projects are often in different areas. So we're just going to have to make a call as to which one to shut down. And I think the biggest thing I've seen people struggle with is knowing how to make those calls. And you will make mistakes when you make decisions like that. Sometimes you shut down the wrong thing. Sometimes you invest. But I think what you teach the business is two things. One is how to finish projects, not just start. And finishing is a much different skill set than starting ideas. And that's something which a lot of companies lose along the way. That's how they end up getting slow. Because they start a number of 100 different ideas in the pursuit of speed, but they don't actually finish anything. And I think that clogs up the system. And the second thing is they don't have a nice data-driven methodology or framework to prioritize. And so in the absence of that, again, you're making these gut-based decisions, which when you hit scale up is very risky. You're making big decisions then based with no data. And I'd say in the last 5 years, we have changed completely. Our organization is entirely based on data. And so whether you're in sales, you're a junior executive in HR, everyone is using data to make decisions. It's not just the product and engineering teams.
Okay, that's really interesting. Okay, bringing back to what we were just very briefly mentioning on about the fact that when you joined, PropertyGuru is still very much a more classifieds kind of site. Today, you guys are more of a marketplace model, and if you look around, I mean, there are many of these companies that, maybe start off as classifieds, kind of made that drift into marketplaces. I was wondering if there is still a future for classifieds models, even though I know we do see a number of them here regionally and globally, but a lot of them do compete with existing marketplace models that we see, the generic ones that we know about. But even the tech players like Facebook or Instagram, they also allow listing services on their site. And even when you look at specific sectors like property, which you guys are in, as well as cars, they have their own marketplace models as well. Is that something that, is there still a place for classifieds today?
Yeah, I think classifieds are perhaps the first business model of the internet. It's over 25 years old. This is where it all started, to be honest. And yet they're still there. They're generating hundreds of millions, if not billions of dollars of revenue globally, right? Even in the US and China, et cetera, you still have sites. I think the difference is the front end versus the back end. The platforms that remain purely classified sites, and the way I distinguish between them as a technologist is a classified site is primarily serving the advertiser. If you think about a classified, you have the advertiser and you have the person consuming the advertising. A classified site solves for the advertiser. It's like a media company. A media company is, they may say they're solving for the audience, but really they're solving for the advertiser. The advertiser says, put another page in the newspaper or put another ad in the middle of the video. They'll do it. If they were truly solving for the consumer, you wouldn't see that. A marketplace model is really in the business of aggregating demand. And that's what PropertyGuru is today. So what we say is, and we articulate this, our primary customer is the free consumer, the property seeker. They don't pay us any dollars, but they pay us with time, which is perhaps the most important asset that we all have today. More than money, more than data, time is the most invaluable asset. And I think that's how people actually invest in us. And so what we try and do is optimize the experience for each user. Now we're on a journey, and in each market, we're at different stages of that. But if you look at it in Singapore, for instance, the objective is very much about you and I should have different experiences on PropertyGuru over time, because maybe our property experiences, let's just assume for a second, our property expectations are very different, our needs are different, et cetera, et cetera. And so you and I should not have the same experience as each other. Now, if you're in a younger country, which is still in the early stage of discovery, let's take Vietnam, where we're also a market leader. Vietnam is very much around, can you please tell me what's available? Just coverage as a first point is important. And there, I'd say a classified site or a classified business model is still invaluable in the sense you still need it to be easy for people to show listings, to display that. That does not take away from the fact that you need to have a marketplace technology underpinning it so that you're optimizing, you're rewarding good actors, you're rewarding legitimate agents, you're rewarding good property sellers, and not just focused on duplicate or fake listings and fake content, etc. So I think this evolution from classifieds to marketplace, the front end may change a little bit. I don't expect it to change a huge amount, but the back end is massively changed. You're using artificial intelligence to match supply and demand. You're using artificial intelligence to penalize bad actors or reward good actors who are publishing good content through how they show up in the sort, etc. So technology can change the experience, but I think the other aspect is people want deeper content. Just showing an advertisement is not sufficient. So for instance, in our case, we feel people need access to understanding their financial wherewithal. I can show you a house that's worth $10 million and $100,000, but unless I know which one is in your budget, it makes no difference. So I think I'm more useful to you if I tell you your affordability, connect you to that home loan, tell you what pricing trends. I got to give you a number of things, not just the listing, for you to make a property decision. And I think that's why if you look at our product diversification, it's very much with an understanding that this is the largest asset class in the world, property. It's much larger than anything else that exists. And so as someone is going to make a property decision, they need a lot of content, not just the listing, to make that decision. Even a rental decision often needs more information. What's the neighborhood content, proximity to public transportation, what is happening in terms of neighborhood safety in some places. It's not just about Singapore. We operate in 5 markets. So we invest in a lot of other content as well to help people make these confident property decisions.
Right. So, I mean, entering into this P3 stage that you're talking about is the next growth stage in Fintech and transforming yourselves into, I think we did mention earlier about this before, becoming like a data platform for property.
So I think what we're trying to build is what we call a property trust platform. When we look at the 4 large stakeholders, you got property seekers, you got agents, you got real estate developers, and banks and valuers. If you look at these 4, they really don't trust each other at all. None of the stakeholders trust each other. And the reason for this is multifold. One is the lack of transparency. They don't know what's happening between each other, but there's also a lack of technology adoption. There's a lack of a single source of truth when it comes to real estate data. So what we have started from last year is we want to build out platforms that we want to become the software layer for real estate developers, for agents, for banks and valuers to drive internal workflow automation, to drive internal efficiency. Already today, we sell software to banks and valuers in Malaysia, and we sell software to developers in all 5 of our markets in Southeast Asia. In addition to this, though, initially through acquisition, we are building out a suite of products and a capability which we call Data Sense. And Data Sense actually is data-driven insights. Can they help can we become the single source of truth? You look at more developed real estate markets like the US, Australia, etc. There are other companies like CoreLogic, which are the single source of truth when people are, whether it's an urban planner, whether it's a real estate developer or a valuer, or even a consumer, they have this single source of truth which tells them what's happening. Not just transaction data, but asking prices, trends on rental yield, etc., etc. We don't have it in any market, not even in Singapore. And so what we are trying to build out is become the single source of truth when it comes to real estate data, provide internal workflow automation-driven efficiency, drive more financing-based transparency, so financial literacy, etc. And I think that's also a thing we're doing. And then finally, obviously, we have our marketplaces which drive transparency so people understand. The idea is through transparency and efficiency, as a lagging indicator, we will create trust. And so as people start trusting each other more, it'll drive more activity, more economic activity in the property sector. And we see ourselves as the enabler for all that activity.
What kind of timeline are you setting yourself for some of these targets, as you mentioned, like this particular software service that you mentioned about? I get a sense it's already in motion, but perhaps the plan is to kind of, ramp up your onboarding for some of these particular projects.
So let me talk about them in 2 pieces. I think one was in 2020. So last year when COVID hit us, we weren't expecting it. We changed and accelerated some of these business models faster. So for example, I'll just talk about finance. We launched PropertyGuru Finance in April of 2020 in Singapore. it's a smart mortgage brokerage, essentially. We're a mortgage broker, but we provide more efficiency, more technology connections with over a dozen banks in Singapore for people looking to finance or refinance their homes, to buy home insurance, etc. And in just over a year, we've already brokered over $1 billion, over Singapore dollars, $1 billion worth of home loans. That's from a standing start. We had done zero to $1 billion in just over a year. And that's just scratching the surface. It's showing you that people are looking for other options, more technology-driven options in that space. When it comes to software, we've been selling our flagship product, FastKey, to real estate developers for a few years. But in 2020, we shipped another module called Storyteller, which was built on top of FastKey. And Storyteller allowed remote buyers to view neighborhoods and condos, etc., go down and actually do a booking, because it's connected to a booking engine, which is ours, which at the back end integrates with the ERP for the developer. But essentially, it was creating sales process automation, everything from balloting to taking information, generating of conveyance documents, all of that could be digitized. So I think the idea is we've already shipped some of these products. And then at the end of 2020, we bought a company called My Property Data in Malaysia, and they have a software that connects banks and valuers. Today, it's called ValueNet, PropertyGuru ValueNet, and that allows valuers and their workflow to be automated. We are in the process of improving the tech, bringing it over to Singapore, so valuers in this country as well could enjoy that. So we have started down that path. And I think last year when we raised money from our existing private equity investors, we said we're going to start building out this vision. And then that's, it sort of connects a little bit to why when we think about our capital strategy or our capital structure, it's very much in pursuit of delivering this company, this corporate vision and this corporate strategy. So when we realize that we're going to build some things from the ground up, but there's also the opportunity for inorganic growth. And when you look at data and software and even fintech, there are some exciting companies in our part of the world who are doing some things over here. But we think that under the PropertyGuru umbrella, they could grow faster, they could create more efficiency. And so what we've been successful at doing always is having a strong core organic growth engine and then supplementing that with inorganic. And so though we're about a year, 15 months into that journey, we see that once we complete our listing, et cetera, and we get those funds, we will be much more acquisitive, and that will further accelerate our growth in the next 3 to 5 years. So between 2022 to 2025, we see eventually data and fintech, for example, accounting to 12 to 13% of our top line by 2025. And I think that shows our ambitions for that part of our business.
On the fintech side specifically, I mean, how big is the opportunity for fintech, specifically for PropertyGuru? I think that's number one. And number two, I mean, do you see yourselves as doing lending outright, or do you see yourselves as taking more of a back end and really supporting some of the existing lenders that are already out there?
So I think, first and foremost, we see ourselves as a technology player. But when you think about the fintech space, the journey we're on is, we started first with offering home loans and building trust as a brokerage and brokering these home loans. And we've done over $1 billion of loans. But I think over time, and then we've already started helping people with refinancing and insurance. But over time, absolutely, we are thinking about white labeling, et cetera. We estimate the fintech opportunity as, in US dollar terms, about a $1.7 billion TAM. So we think there's a lot more that can happen in this space. There's been a lot of fintech disruption in Southeast Asia, but almost none of it has been focused on property financing, mortgages, et cetera. And I think we are laser focused in this context. So, and I think, again, if you think about wealth management and et cetera, and asset management, this is the largest asset there is. If you do a lot of work to do with public equities and fixed income, et cetera, that's great. But when you look at anyone's asset base, the largest asset they have is real estate. And none of the fintech is actually solving for that today. And I think that is the opportunity that we are going after. And I think that opportunity is quite large.
Okay. Yeah, because I ask this because, in Southeast Asia, we've seen quite a number of the tech players eventually start to acquire some of the existing lenders in order to get hold of their license so that they can, disperse loans on their own.
I think, to be a broker, there is no licensing required. We obviously work with the MAS and we talk to them regularly, but it's an unregulated part of the sector. Now, if we start actually taking balance sheet risk, obviously it's heavily regulated, right? And it needs to be. I think that is something that we are not pursuing right away, but you could see us eventually white label home loans, working in partnership, in very close partnership with a financial services provider, someone who's got that license, who might want to look at things such as syndicating risk, all the back-end stuff that's required, they can play that, and we can focus on loan origination, etc., and drive that better consumer experience. Obviously, the benefit there is better economics for us in that business model, but we don't necessarily want to get into the balance sheet business. We're an asset-light technology business, and never say never. And if we believe that's the best way to solve the problem, we will look at it. But that's not the immediate approach that we're pursuing.
Okay. One thing also that's interesting, I find interesting about PropertyGuru is that you guys are an interesting case study when it comes to M&A. We've conducted so many acquisitions through the years. I don't remember any other unicorn that has done so many acquisitions the way that it has. Even your own spec merger exit is a merger. What would you say is PropertyGuru's approach when it comes to M&A? And what are some of your views around using M&A as a strategy to scale?
I think the key thing is you've got to buy a company for something more than audience and revenue. We have never bought a company for audience or revenue. We look at capability, we look at culture to start with. I think why we have done it for so many years is we know how to integrate the businesses. That's hard. A lot of companies think it's actually relatively easy to get the money and buy the company. That's quite easy. Once you agree to terms with the entrepreneur, he or she is going to sell their company to them. There'll be an earn-out. All that's pretty easy. That's super cookie cutter. If you have a good VC or PE, they can guide you through it. That's easy. The part that no one can guide you through is integration. There's no VC or PE that can help you with integration. That's when the exec team needs to roll up their sleeves and do it themselves. And I think that is a lot harder than most people estimate. What we have been successful at doing is actually acquiring everything from the software business to the awards business, the Vietnam entry in 2016. Were all through acquisitions. But the entrepreneurs, in many cases, stayed on for many years as executives in the business. Even our data business we bought last year, we really liked the entrepreneur. He's now an executive inside the company, building out our vision for data. So I think this acquisition is a great way to build out capability sets. The one instance where we did it to consolidate market position was our latest acquisition, where we bought REA's businesses in Malaysia and Thailand. So buying iProperty Malaysia and buying Think of Living in Thailand. We thought those were well-run businesses. iProperty and PropertyGuru Malaysia have slightly different audience segments. There is an overlap, obviously, because they were a competitor, but it's not a big overlap. And we're going through the integration process right now. We're understanding all that. But again, the MD of the business in Malaysia is very much part of it. He's in many ways leading the integration process. And then Think of Living is a different capability. They do video-based content, which we don't, and they focus on primary real estate. Where in Thailand, our product, DD Property, is really focused on rental and resale. So it's a mutually exclusive asset. So I think we look at, the advice I would give is don't look at it as buying audience or buying revenue. That, in my experience, even going to previous companies I've worked for, those don't tend to work well. But if you think about cultural fit, if you think about capability builds for your business, things like that, you have a higher hit rate. And I think when you look at us, not all our acquisitions are going to be successful, but I think we are not afraid of it because we've built out capabilities, everything from a strategy team to, we're doing post-merger integration. We have an entire Tiger team that comes together, in this case, with iProperty and Think of Living, to integrate those businesses. So much more thoughtful, thinking about the people, the technology, the commercial aspects, all those things, so that you understand that it's a living, breathing organism that you're acquiring. It's not an Excel sheet. And I think that's the critical thing.
Yeah, I mean, interesting you point out the thing about integration, right? Especially when you're talking about, I mean, already you guys are a regional company, and I guess that's the same for most Southeast Asian startups, where they are regional literally from day one, Series A, and they're already like multiple cities. And then when you talk about M&A, it's a different level altogether, being able to integrate some of these new components into your own company. I was just wondering, with each M&A acquisition that you did, were there specific iterations that you did that, to kind of help kind of make the process a bit more seamless? What were some of these takeaways and iterations that you made with every successive M&A transaction that you did at PropertyGuru?
Absolutely, we've learned a lot, and I think I often call it scar tissue. We have a very experienced management team. We've made a lot of mistakes. We've had a lot of wins. But I think that's why, for example, we've been able to navigate COVID so well, because this team is not scared by it. I mean, there's no rule book to lead a company through this kind of an experience. but I think this team is more experienced than anyone else in this region, and so we know how to run a business at this point. The lesson is focus on the people, focus on the culture, think about the integration process, understand that when you put the two pieces together, what is the experience? You're going to have to actually play out everything from rules of engagement, how is the customer experience going to be? Let's say you plus the company you're acquiring were both selling to the same customer. What's that customer interface going to be? What are the back-end integration things? Now, some of this you can do before the fact, and we actually bake that into the economics of the deal. So before we bring it to the board, our team has gotten better at sort of assessing some of these things. And then some other things you do after the fact. And I think, we take a lot of inspiration. Like I said, I've spent over 20 years in technology. This is the only industry I've been part of. I've worked through different verticals. I started in the Silicon Valley, and the first company I worked for was Cisco. Cisco grew through acquisition. Almost all of its businesses going into Wi-Fi, going to IP technology, IP voice, all of that was that. Then you think about the digital age. Another company I worked for, Yahoo, again, a lot of acquisitions through the years to become better. Google, we think about YouTube, Android, a lot of their big growth levers were acquisitions. And the same with Facebook, Amazon. I'm talking obviously gold standard companies. And then you can always find examples of companies. Having said that, they always built organically as well. It wasn't, you think about a Google. I mean, Google search has continued to evolve, and that's an organic build. YouTube was bought, but then developed. And if you look at us as well, we bought a small piece of software called ePropertyTrack, and we've evolved it and grown it and scaled it. And it's now a totally different thing, and it's called FastKey. So we have invested in it. So it's not just that we bought something and kept the lights on. We bought something, brought in talent, and scaled it up. And so for the entrepreneur, the opportunity is you come in, you get to work with our higher quality engineering teams and our vision, etc. Plus, we will build a vision together to achieve things. And obviously, as a startup, you know, in most cases, you're loss making. You're trying to figure out about your runway, how much cash do you have left in the bank. We are an operationally profitable business. And so that is something they don't have to worry about. You don't have to worry about runway. There's no concept of runway at PropertyGuru. So you're thinking much more in terms of what is the vision. And today we compete against our ambition. So I think for some entrepreneurs, the opportunity is if you want to come and not have someone sort of just absorb you, but rather give you space to operate. And I think there is a model today. The company I worked for prior to PropertyGuru was LinkedIn. And obviously LinkedIn got bought by Microsoft. And I think what Microsoft did very well was leave LinkedIn on its own to grow well. And I think with PropertyGuru, we have examples where we've left businesses alone to grow well, like our awards business, largely left alone to grow well with its own team. Many of the executives who were there 5 years ago are still there and still growing in that company and developing. And then there are other places where we will more tightly integrate because they are younger businesses or they become features. So for example, my property data is now part of DataSense because the entrepreneur and their capabilities were perfect to be part of a bouquet of services. They were not standalone. It wasn't a bolt-on. So it's also understanding where are you doing a bolt-on acquisition versus a fully integrated acquisition. And I think this is where the entrepreneurs need to be a little smart about it, because sometimes you look at the revenue size or you look at this and you say, hold on, if I do that, I can IPO or I can sell my company to something. That's a really dangerous game to play, because I think in today's day and age, sophisticated investors know how to pick through this and understand what are the true synergies, how are you thinking about integration. And so I think investing a little bit of time and effort and capability into integration is perhaps the most important thing I would give for anyone who's thinking about inorganic growth. But I think definitely when you look at the digital world, most successful businesses use acquisition to grow. And we take our inspiration from the very best companies in the world, even from the Chinese majors, Alibaba, Tencent, etc. They've grown in many cases through acquiring assets and growing through Meituan, Dianping, bringing those companies together. So why would it be different with us? I think Southeast Asia should be the same.
Cool. Okay. One question on your SPAC merger, which is yet to consummate. I think you guys are eyeing by next year, Q1, I believe. But I think since our last conversation, and this has been around for several months, is that the US SPAC market has cooled down considerably in a last few months. I think there was an article earlier this week that was quite interesting from FT about how even share redemptions have risen significantly.
Yes.
And in some cases, it has left no money left in a trust fund before the SPAC listing is even out right out the door. So some of these investors have had to top up as well. How nervous are you about the market conditions in the US right now?
See, I think obviously we observe all of this, but this is where averages don't make sense. There's no some concept of all thing. If you look at it, those articles ignore the companies that have successfully de-SPAC, done very well, had very low redemption rates because the fundamentals of the business were fine. If you just take on average everything, the vast majority of SPACs were focused on sectors which were more speculative or were young. So whether it was space travel, electric vehicles, things like that. So those are companies which were pre-product in many cases, pre-revenue. We had a company which has a business model which is 25 years old. We are half marketplaces, half software. Both of them have a lot of listed comps. The other thing I would say is, specifically on the SPAC we have, there are no retail warrants. So there is no concept. If you understand the structure of how SPACs work, you can redeem and still hold on to your warrants and get the upside, which is the case in many companies. In our case, if you redeem, you're out. That's it. There are no warrants. You have completely sold the stock. And if someone fundamentally doesn't believe in us, they might redeem, and that might be there. But I think the other part is we have met a number of investors who are current SPAC shareholders. If you look at the construct of our specific SPAC, we have a number of shareholders who are from Asia, who have linkages either to Pacific Century Group or to Thiel Capital. They understand the company specifically. They met us as part of the roadshow. We continue to meet investors. And then we have a $132 million pipe, which is completely guaranteed. And that has investors like Bailey Gifford and Naya, and so one of the large pension funds from Malaysia, Acaris. So you have these very sophisticated investors who have put money in, who have high opportunity cost. We have TPG and KKR who are not selling down and are locked down for the standard 180 days post the listing. So basically through the first half of next year at the very least. So I think there are a number of things which make us look very different. Now, would we still have redemptions? Would something still happen as per sentiment? Time will tell. It's hard to see what will happen. But I think I tend to ignore averages and try and understand what is happening to specific companies and specific de-SPACs that have happened. And again, if I was raising a SPAC today, yes, I'd be troubled by it. But we are past the de-SPAC. We are past the pipe. We are now at a place where the SPAC structure is less relevant, and it's more to do with us fulfilling the SEC's inquiries. And obviously, we're going through that period right now where the SEC inquires and it's corporate secretarial work. They want to make sure that the shareholder interests are protected, that everything has been done legitimately, and that's true of any form of listing. But I think we have passed a number of those checkpoints and those gating elements. So time will tell, but I remain confident that we have done the right things, and we will be listing probably in Q1 next year.
I also noticed that in your investor deck that most of the companies that you compared yourselves to, well, some of them were actually European or Australian. So like Scout24 from Germany, Domain Group from Australia, and Rightmove from UK. Do you think that's kind of like a potential risk that you saw yourself that you had to take? The fact that most of the people that you're comparing yourself with are not even American companies. And so maybe US investors may not necessarily understand PropertyGuru, especially coming from Southeast Asia, where there aren't that many Southeast Asian companies in the US.
So we've been investing in public investors in the US since 2019. So it's been 3 years that we've been talking to them. We tried to take the company public in Australia back in 2019. That's when I actually flew, the CFO and I flew to Boston and New York. We met investors, we spoke to them. The US investors are highly sophisticated when they understand emerging markets. They don't frankly care whether you're Southeast Asia or India or Latin America. They look at it as an emerging market. They try and assess what is the TAM, what is the opportunity. If you look at it in North America, Zillow, Realtor, etc., did have a business model exactly like us until very recently. Only more recently have they evolved that business model to other things. So people understand a lot of what's happening here. They understand that we are on a journey as well. So I don't think I'm overly concerned. I think the other part I'd say is Thiel Capital obviously is a stakeholder. TPG and KKR are American investors. They're giving access. We have a number of American investors who are current shareholders in the company who are going to be stakeholders in this. So I'm less concerned about that. And we're less dependent on just pure play retail investors in this context.
Okay, I think we have come to the end of our time together. Thank you very much for joining us, and all of you who are here joining us today. I hope you guys enjoyed the session and stay safe.
Thank you, Kristie. Thanks, everyone.
Thanks, Hari.